Hey Puppy Trades! I wanted to do a video analysis update on why I bought 3 ETFs today. The ETFs that we're going to go over are why I bought 3 parts CONY and 2 parts FIAT. Those are ETFs we're going to get into that are highly correlated to Coinbase. And so Coinbase having 3 parts CONY and 2 parts FIAT, it's important to understand that that is still a bull bias position towards Coinbase. The other position that I bought was also bull biased. It was on PayPal. I bought the PYPY uh, out of the money synthetic covered call ETF from YieldMax. All 3 of those ETFs have an ex-dividend date coming up. So I have actually owned CONY for a very long time. I took a lump sum position. Like I say, I practice what I preach. I blended 33% Coinbase with about 66% CONY. And so that was around the time of this video. I cashed out a 240% gain on Coinbase, and I collected amazing dividends from CONY just in time for me to start buying CONY, FIAT, and MSTY together to hedge downside exposure and still have a bull bias towards Bitcoin, which is something I went over in this video. And I also went over how I was starting to take a bull bias position on Coinbase. As of this video, we did see Coinbase explode into wave 3 of wave 3. I'm going to continue taking bull bias positions, 3 parts CONY, 2 parts FIAT before this ex-dividend date. So we're going to look at this right now. The distribution schedule, very interesting, something a lot of people are leaving out. These compounded yields, the power of compounding the yield. The 11/13 ex-dividend date is coming, and we can see this is the Group C ETF, CONY, Fiat, and PYPY are both in those groups. We can get the Airbnb and ABNY. That has a really interesting setup too. But notice that for CONY and Fiat, the very next week, there is a ex-dividend for MSTY, also correlated to Bitcoin. And for PayPal, the very next week, there's a highly correlated ticker, Square, now Block, not my favorite name change, that is highly correlated and is also going to have an ex-dividend date. So a really cool opportunity to get this big dividend and compound it into MSTY, get this big dividend compounded into SQY. That is certainly what I'm doing. So we're going to get into Coinbase real quick. If you guys like videos like this, make sure you like and subscribe to the channel because I really want to make videos like this, retirement blogs, and these Elliott Wave updates like my last video on an almost daily basis. And I think we have the market. We also have the following. I'm really proud of you guys and the engagement. It's easy to be engaged during a bull market. Anyway, Coinbase, the IPO is actually a large wave 1, and this is a wave 2. This is a large wave 1 and an ABC wave 2. Remember, I started this kind of Coinbase heroic predicting all the way back here. All the way back here when Coinbase looked like this. So that's maybe one reason to like and subscribe to the channel, because it's been going pretty well. If we throw CONY into the blind average test since its inception, we can see it has an 83% total annualized return, blindly averaging into CONY. Very impressive, not even needing to be hedged. And for PYPY, we can see that it has a 60% blind annual returns when it is averaged into. So very good. Past performance never indicates future results. And obviously, I was using CONY and FIAT together to buy lots of MSTY. That has obviously performed outstandingly well. So this is going to get more into my Elliott Wave evidence for why I'm actually taking a bull bias position still on Coinbase and collecting crazy premiums. One of my most successful trades ever. was NVDY. I think that CONY might be challenging that. So we're going to look at this massive call skew now that Coinbase is breaking out. This is wave one and wave two. This is a large wave one and an ABC wave two. For most of the time in this channel, I haven't been a base breakout trader. Why? Because when Coinbase is already doing this rally, the implied volatility kicks in, the skew to the call kicks in. It's not good to be a Coinbase options trader. That's why, or before 2020, before 2021, it wasn't good to be a Coinbase options trader. All right, it was all kind of, all the implied volatility in the options is baked in. And so the only way to, really profit from that was by selling options, which took tons of collateral. Now, because of CONY, it doesn't take tons of collateral. It takes $20, and it actually takes less with fractional shares. So this is a large wave one and an ABC wave two. How do we know this is a large wave one and a wave two? Look at the monthly RSI. The monthly RSI makes a higher high, 66.33 versus 64.69 in Elliott wave theory. Wave 5 ends with momentum divergence. This looks very good for Coinbase, that is within a wave 3 of wave 3. The minimum wave 3 target is 398. I actually think a more realistic, ideal wave 3 target is going to make a new all-time high. 466 is the 127.2% extension of the length of wave 1, placed at the ABC. Wave 2 low for wave 3 before a shallow wave 4 and a wave 5 higher. So during this wave 4 correction, that's going to be a very profitable time to collect lots of dividends from CONY. Similar to this wave 4 correction, it was better to compound the yield, in my opinion. But the best of both worlds is blending them together. Now that Coinbase has taken off, maybe not the best idea to blend together, but maybe not. What do I know? Anyway, CONY and FIAT, I bought 3 parts Coinbase, the CONY, 2 parts FIAT. I'm really excited for that dividend announcement. We'll see what happens there. I wanted to give some corollary evidence with Coinbase. I talked about BITO. I made a video about BITO, and I own BITO. So I think I've covered that chart pretty thoroughly. We're just going to get into some of the mining stocks. CleanSpark, wave 1, wave 2, 1, 2, 3, 4, 5, wave 3, wave 4, wave 5. Those 1, 2, 3, 4, 5 waves make a wave 1, wave A. This is an ABC correction. Very clearly, the length of wave A placed at the wave B high was where wave C ended. That's what this 100% extension is denoting. And then from this low, wave 1, wave 2, explosion into wave 3 of wave 3. I said, oh my, I can't believe my target is 31. I don't feel so oh my about it right now. Hey, my target's 31. That's kind of more what it's like. Anyway, 5 waves up, ABC 3 waves back. Don't get nerdy until the CleanSpark hits 30. That's what the Elliott wave is saying. This is 1, 2, 3, 4, 5, wave 1. Look at this beautiful, by the way, untouched chart of Bit Digital. Come on, snap, 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 clap, clap, clap. I'm like Bolby in this beat. This is a 1, 2, wave 3, wave 4, wave 5 ends with a momentum divergence. That's a wave 1. An ABC wave 2 at the 61.8% retracement. And then this is a large wave 1, wave 2. I had this wave 3 drawn. Bang! We see that perfectly. My bang almost knocked over the entire recording set. This is a large wave 3. And so the minimum target is right there around 6.56. It can go all the way up to 8 for Bit Digital before eventually a shallow wave 4 and a wave 5 higher. So that's kind of corollary evidence for Coinbase. I talk about BITO and BITX a lot. I posted about BITO and BITX. But oh man, look at that. Oh my goodness. Oh my God. I did it again. I did it again. And that's without the dividends. Man, a lot of people, this is one of my favorite charts. Because people, they're bullish Bitcoin, right? But it's just like oil. It's just like oil. They're bullish Bitcoin, but it's a volatile asset class. But they have the right idea that it's going to be inflation. But what they don't know to do is that dollar cost averaging isn't about dollar cost averaging every single time the price falls. It's about finding an interval. Hint, that is why this has a periodic investment tab that is in intervals. It is in daily is not the good one. Okay, so I do monthly, blindly averaging into BITO of 54.94% total annualized return. Let's be honest. Most people would not think that's the case. Looking at this chart, looking glorious for BITO. I still own it. Getting a big dividend from it very soon. BTDR. Oh, bit dear. You're one of my new favorite charts. You're one of my new favorite stocks. I saw you on a screen, and you were one of the times where low liquidity was a good thing. A lot of people don't understand how low liquidity can be a good thing, but when a stock is just never, ever on these screens, and then all of a sudden, it's making all the right readings, sometimes it quacks like a duck, and I disagree with Stephen A. It is a mongoose, it is a platypus, but a lot of times, yeah, that's a duck. This is a wave 3 of a wave 3. It was on the screens for the right reason. BitDeer Technologies, leaving the bears behind. Let's get into PayPal and Square Cash. PayPal, let's start with this daily chart. Because again, more opportunity to collect lots of option premium that wasn't there 2 years ago. Thank you, YieldMax, because what's happened, YieldMax has started an arms race. YieldMax has started an arms race, and so now they have lots of competitors. Freaking BlackRock has a Russell 2000 fund that has a 25% yield, and it's got a pretty nice return to a blind IWMY. They're competing. It's an arms race. YieldMax says you have to yield. And so that's why I talk to these boomers and I'm like, what's your yield? What's your yield? And they say, well, when I call my CFA, we just drink coffee and we talk about the Cowboys. And I'm like, yeah, that's why they want you to talk about the Cowboys. They don't want you to talk about this yield. Why? Because if you knew about this yield that was out here, baby, you wouldn't be paying that fool a damn penny in assets under management. You definitely wouldn't be talking about the damn Cowboys when you're on the phone with him. Wave 1, ABC, wave 2, 1, 2, 3, 4, 5, wave 1, ABC, wave 2, big wave 3, wave 4, and a wave 5 is in progress. So we got bloated call premiums again. And what do you know? There's an ETF that just dropped. It just so happened to drop at the perfect time. Wow. YieldMax dropping. It's not all of them. The YieldMax theory has low-key kind of been disputed, that they drop these at special times because they're wave theorists. But PayPal and Square Cash, if they were trying to, they nailed it. 70% total annualized return. These were yielding 100% recently. Good God Almighty. So this is my short-term view, but really it's the long-term view that matters most for the PayPal ETF, because this could last for a long time and I'm going to be getting so many dividends from it. I honestly expect this ETF is going to pay for itself by the time PayPal's like right here. And so all the, and so I can still even choose if I want to blend this, but this is what I have for PayPal. 1, 2, 3, 4, 5, large wave 1, wave 2, big wave 3 in progress. I'm going to collect large, hopefully skewed call premiums the entire time. Square Cash, very similar opportunity. Wave 1, ABC, wave 2, wave 1, wave 2, from this low. Wave 1, wave 2, exactly how I drew it up. Wave 3 of wave 3 before a shallow wave 4 and a wave 5 higher. Just giving on the daily chart more corollary evidence. For PayPal, we look at Square, we're going to get it on the weekly. 1, 2, 3, 4, 5, wave 1, ABC, wave 2, and then this is just Rene Renoir right here. Wave 1, ABC, wave 2. I need to speak French if I'm going to keep looking at my charts. Wave 1, ABC, wave 2, wave 1, ABC, wave 2. Beautiful wave 3 was confirmed. That's 5 waves up, so that's a lot of Elliott wave evidence. Oh man, I almost said that in Italian. That's a lot of Elliott wave evidence. This is a wave 1 and a wave 2. Fevelissimo, another 1, 2. At least 5 waves up, but it's really wave 3 of wave 3. Pretty soon that 72.69 is going to go on the RSI. It's going to be all but confirmed. Don't believe it. Just watch.